Hey guys, welcome back to our blog. I'm Luke Ediger, Sales Manager here at Charleston Homes. Today I have Eric Almquist here, Benchmark Mortgage with us. Want to talk a little bit about what's going on in the market, rates, whatnot. So, welcome.
Thanks, Luke.
Yeah, so what can you tell us about the current market? What's going on?
You know, that's not a question I get very often with clients is, hey, what's going on with rates? You know, if you look at the current interest rate environment, we haven't been in this kind of environment for a while, meaning you've got the Fed in a tightening cycle. So What that means is basically the Federal Reserve meets once every 6 weeks, and they are adjusting short-term rates up. And the reason they do that is to slow down inflation before it gets started. So if you watch the news at all, you've seen over the course of the last year, about every 6 weeks, you'll hear about what the Fed did, and they're scheduled to probably raise short-term rates one more time before the end of the year. Now, most people think that that has a direct impact on mortgage rates. It actually doesn't. But what happens is when you see short-term rates going up, eventually long-term rates follow short-term rates, and so you see a gradual uptick in rates, which is what you've seen. And it's more the market normalizing. You know, we've had really low rates for a really long time, and you're at the point now where the market's going to normalize a little bit. And so what does that mean? You know, rates have already started to go up. If you keep having positive economic data, you know, we're basically at full employment. Unemployment rate's as low as it's been in 50 years. All of those things, you know, when it comes to rates, positive news, kind of negative, you know. So you see those things happen. You see mortgage rates go up as a reaction to that. Historically, rates are still great. I mean, still a great time to buy a house. But you have seen an increase of probably 1.25% from where they ended the year last year, 1% to 1.25% higher than where they ended the end of last year.
Yeah. So it kind of depends on how the market continues to perform, whether or not those rates are going to continue to rise, or obviously if there's some sort of a downturn, then those may eventually come down. But as long as it's going up, they kind of want to maintain that so we don't have a lot of inflation. So
yeah, the Fed's goal is to head off inflation before it gets out of control, and they use monetary policy or the raising of rates to do that. Mortgage rates generally trend in the same direction as what short-term rates do. But yeah, I wouldn't tell you that I see something immediately that's going to happen that's going to drive rates lower. But if you did have a pullback in the market or a correction in the stock market, any of those things, you know, you would see a pullback in rates a little bit. You'd see rates go down a little bit on those notes.
But overall, still a good time to buy a home, right?
Great time to buy a house. You've seen the stock market do really well. You're seeing a great economy, you know, good growth, low unemployment. All those things from a buying perspective are good.
Yeah. Well, good. Yeah, always great information, Eric. Definitely, we'll put a link to his information. And if you guys have any questions on financing, feel free to give him a contact us. We can get you in touch with him. Always, you can visit us at our website at charlestonhomesomaha.com.